Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Important thing happened today, I think. You're tired of hearing about it, just like I'm tired of reporting it. But every day the market seems to be resting on whether or not there's going to be any new news or any news releases coming out regarding the U.S.-China trade negotiations. The day is coming in the not too distant future where they're actually supposed to sign the Phase 1 deal. But today there was a report that came out that said that China was balking a bit at the amount that the U.S. wanted China to purchase of our agricultural products, that they didn't want to commit to the number that President Trump had been talking about, and that was a bit of a hang-up as far as signing this Phase 1 agreement. Well, that sent the futures down immediately when that happened, but unlike other days where that might have sent the market down several hundred points, we actually went down a bit and then rallied back and finished to close at another record high. So I think that might be an important change of character to the market, that the market is expecting some sort of a deal to get signed. They're just working out the agreements, at least a preliminary deal, and the market seems ready to move on past that. The rally continues, although at a slower pace. Let's take a look at the charts and I'll show you what I mean. So as we take a look at the chart of the SPY, you can see that we did close at a new all-time high today, but it does seem kind of like the upward momentum is losing a little bit of steam. Or is it? Let's take a look at the DMI for some confirmation and see what it shows. And you can see that we have the ADX moving to the upside. It's broken above 20, which I use as an aggressive level, and we're about to break above 25, which is a bit more of a conservative level, but what a lot of people look for as far as a signal of the strength of a trend using the DMI. We have good separation still between the two directional indicators, so at least from the DMI standpoint, it does look like there's strength to this move and that it could continue. Now remember, we do have our target. Look at last week's recording if you haven't already to see where the fib levels show us up at around 313 is our target price. We're not far from there. We closed at 309.10 today for the new closing high. And if we look at the moving averages, you can see we're kind of trending right along that 10-day moving average. And this, it's a little bit more than a 45-degree angle, but a nice marching trend. That those are the ones that tend to last and tend to work out. So we're at a 72% fib extension level, which is kind of in no man's land for the wave 5, and then we have that 313 target for the zigzag pattern. So it does look at this point in time like the market wants to go up and hit that level, but at that point in time it's going to get very interesting to see where we go from there. Looking at the VIX, you can see that we have bounced off that 12 level, but we're bouncing off, showing a little volatility intraday as the market continues to the upside. We're in a little bit of a not a significant buy the dips, but intraday, as the market tries to sell off, it's being bought or hit with buying. So the bids come in as the market begins to move down, and that's a little bit different than what we were doing in the past where we were trying to rally and sometimes it would get sold off. Well, now people are stepping in to buy, at least for now. And there's room still on the VIX for continued upside if we want to go there. Now, here's something that could throw a little bit of caution onto the rally is the dollar. So we have the dollar with a double bottom right there at the 61.8% fib retracement level. Really good, solid level of support there for the dollar. And we're starting to march back to the upside. As the dollar weakened, that did give some energy for this upward movement out of the market, and I believe that some of the reason that we're losing a little steam here, or at least appear to be, is due to the fact that the dollar is beginning to gain strength again. If it does run up towards that wave 5 high, I think that could put an end to at least this leg of the rally, and whether or not we correct or not remains to be seen in the market, but at least we would end the rally portion of that wave 5. Wanted to show you interest rates as well. TBT, we're up at that 24% level, just barely above where we were back at the highs of September. So rates are kind of in the sweet spot. They've crept up a bit, not enough to where they're hurting the market at all. In fact, they're up just enough to where we're starting to be able to maybe wane a little bit off of that fear of recession in the future. However, I will point out that the yield curve is starting to flatten a little bit again. And so if that continues, we might start to hear that worry of recession down the road coming back. We'll see if the interest rates start back down from here or if they creep higher. I'd like to see them move up towards that 38.2% level, somewhere in here, for that market rally to continue. But if it's not, with trading options, we trade both sides of the market, so it's not that big of a deal. In fact, the market moves down faster than it moves up, but I do know that the majority of people do well when the market moves higher. So let's root for the rally to continue, at least for now, but we will trade whatever the market does. If you like this, please give us a like. Don't forget to hit that like button below. The information, one last comment that I would like to make on this rally is I do want to refer back, and please go back and watch some of the past recordings if you haven't seen them, where we talked about way back in the early summertime how expected to see this rally, this market move to the new highs, because there was so much retail money on the sidelines that I feel like we needed to get the market to new all-time highs to get that retail money in so that the smart money, the institutional money, had somebody to sell to as they start to take some of their profits and get off the table. They're always the first ones to get out, and then the retail traders are left holding the bag. You've heard me say that before, but it's important because that's how the markets work time after time after time. So it does look like we're getting there. We've made some significant highs, and we're getting the reports on all the media outlets, all the things we talked about in the past. So go back and watch those past recordings if you haven't already. Thanks for your attention. Hope you've had a good week, and we'll be back to talk to you again next week. Take care, everybody.